Hello, everybody. It's Robin Morton here from Win with Robin and 22nd Century Gold. Bonjour, ça va? Hola, ¿cómo estás? Konnichiwa, wherever you are in the world. Hello, and welcome from the west coast of Scotland, a tiny little island. It is a beautiful but cold winter's day here. We have blue sky and sunshine, and I'll take that any day of the year. And I'm very honoured and privileged today to be chatting with, in a few minutes, with Sean Moloney, who is the founder of Digital Business Masters, the incredible 50K Club, and also he is a Gold Director Elite with Carrot Bars. Because today we're going to talk about why gold, why you should be saving in gold and gold back to digital coins, and why the blockchain is going to impact your life and beneficially. And there is Sean now, so I'm just going to let him in. Hi there, Sean. How are you today? Can you hear me okay?
Hey Robin, how's things?
Yes, very good, thank you. I was just introducing you there. As I said, you are the founder of Digital Business Masters, the incredible 50K Club, which has been very popular. Thousands of members. If you haven't heard of it, pop over to 50K Club on Facebook. But he is also Gold Director Elite with Carrot Bars, and that's really what we're going to talk about today. Is gold-backed coins, the safe, secure haven for your wealth in gold, and why you should think about not relying 100% on the political and economic shenanigans that are going around at the moment around the world. And so welcome, Sean. How are you today?
I'm very well, Robin. Yeah, a little bit snowy.
Yes, same here.
That's what you get for February in the UK. Probably not as much as you've got up there in Scotland, I don't imagine.
Well, today it's -7 degrees outside, 7 degrees below zero, but the sun is shining, so I am not going to complain at that.
No, it's fine. That's what we do in the winter time. But yeah, no, it's great to be here, Robin. It's I know you're helping and working very hard with various people to understand this very important message, and we're just here today to have a general chit chat about why we do what we do. You know,
yes.
It's something that's close to my heart. We've been building out various asset positions for many years as it happens, but I never fully understood why we needed to be doing that outside, let's say, the fiat system until relatively recently, which is exactly why we do what we do now with gold as a precious metal. Because it is frankly a way to extricate yourself from the shenanigans that Robin referred to. You know, inflation is the big one. A lot of us call it hidden inflation. It's the fact that the value of the currency in your pocket right now is falling in its purchasing power very, very quickly. And that is perceived as prices increasing in the terms of how we live life. Well, it's not just prices increasing, it's the devaluation of the currency, which is formerly called a fiat currency, F-I-A-T. And fiat is basically a Latin word that means by decree. So the reason that the pounds, dollars, euros in our pockets has value is because it's been decreed as such by central governments. And they work with central banks in order for that to be put into the economic system, which is fine on the face of it, and has obviously worked for many hundreds of years in that sense, since people started to place certificates of value on paper rather than exchanging bits of metal or, you know, barter exchanges. It's worked very well for many years, but the trouble is that about 100 years ago now, they started to take the paper currency. It's better known as currency, it's not really money. They started to take paper currency off any standard And in fact, back in 1971, nearly 50 years ago now, they took fiat currency completely off any standard, and so it became a 100% free-floating fiat mechanism based on the US dollar. So what Rod and I spend our time doing is talking about this, and we call this monetary history. We simply provide people access to maybe looking at things a little bit differently. Robin and I came together on our journey in this amazing online space simply because we wanted to look for ways to create value in our businesses as coaches, as providers of services, software, e-commerce platforms, all the things that you are able to do these days in the online space. It's fantastic. But it didn't take us very long to realize that it's all very well working hard to create more income, but if that just leaves you standing still, as many people experience in terms of how they earn wages or earning income in any way, shape or form, we just happen to use the online world to do it. It's very quick you realize that you can't just simply keep chasing income, because it's becoming increasingly difficult and obvious that you can't save your way to a position of financial strength, by definition of the pension crisis, for example. You know, there are millions and millions of people trying to pay forward into mechanisms that at least are supposed to put them in a place of financial strength in future years, but quite clearly that isn't happening. There are also millions of people trying to put money away in savings accounts, but with interest rates being manipulated down to a position of close to zero for the past 10 years, then that money is not only doing nothing for you in and of itself, it's also falling in value every single month, by definition of what fiat is. So it doesn't take a rocket scientist to figure out that on those two problems, you are going to have to educate yourself on how to protect that position, which is exactly why we transfer fiat money into our fiat currency, into real money, which is gold, because gold has the ability to protect you from from inflation, and secure your wealth almost as literally cold storage. It's like a time capsule. You buy it in position today, and it will hold that level, because an ounce of gold will always be an ounce of gold. The old adage, Robin, that we always talk about is, you know, you could walk into a suit shop back in the 1970s and buy a suit for an ounce of gold. And back then, an ounce of gold was maybe £200, $300.
Yeah, well, I remember thinking about gold once, way back. It was around about 1992 when I was obviously still a boy at that point. But you know, I was putting a huge chunk of my salary into a pension diligently every month. You know, working the 40 thing. You know, working 40 hours a week for 40 years. You know, to end up with a pension that's 40% of what I struggled to live on originally.
Right.
And I thought about gold, and I thought, no, gold's not really going to do very much. I don't really see, it's not exciting, it's not sexy, it's stable, but boring, frankly, to me at that age. And then, I was looking at figures recently. If I had taken my pension at that point in 1992 and invested it in gold, compared to what I did do with it, and now the government's taxing me like crazy on it when I try and take it back out again, I think I would be something like $300,000 better off between 1992 and, was it 2012? I saw a report.
Right. So that's the same gold. It's just that it's changed in its value in fiat monetary terms. Yeah.
Yeah, that's right. It's exactly the difference.
Well, that says it all. The point is that weight of gold is still that weight of gold. It's changed in its value in terms of fiat. And then one of the reasons it's changed in value the way Robin describes is because of the falling value of the currency itself. You need more of that currency to do the same. But it does work both ways. If you've only got one, a £10 note or a $10 note, that will buy you less going forward. But in the same breath, if you have something as fixed as gold, it will be worth more in real terms as well. That's the way it works. So it's an incredible revelation, Robin, and we we are very proud actually that we're out there now, just helping people listen to this message. And if you are listening to this and it resonates with you, then you definitely have to speak to Robin, because this is about positioning through education, what we call financial education. We're not here to advise you on anything. I say all the time, Robin, and Robin hears me say it, I don't care what you do. I just care that you listen to what Robin's got to say to help you with your information. And then if you're anything like Robin and I, you'll quickly realize that you need to start doing something about it. Not just to protect your position where you are today, but if you've got any sense of wanting to be secure and have choices and possibly even have financial freedom into your future, then you definitely need to have this information so that you can make the necessary decisions. And Robert and I come across people all the time who do make that revelation, and we're very pleased that we can help them the way we do.
I think Sean, you're right. If we keep it simple and just think about the basics, people get very frightened by technology and blockchain, cryptocurrency. People have heard about the volatility of Bitcoin and all that sort of thing, but underneath all of it, underpinning all of it, it's very sensible, very safe. It's really common sense and what I call cold hard logic, really. Our digital coins are backed by gold. They're not really cryptocurrency in the traditional sense. They're tokenized assets, as you would call them, Sean. So they're backed by real assets. Just it's safe and secure. Well, more safe and secure probably these days than your house. So when you take it down to the basics, you can strip all the technology away. It's actually common sense which is driving what we are doing. There are a huge amount of technological developments coming in parallel with this. We have we can talk about that later, smartphones that work over the blockchain. So I live in the Highlands of Scotland. We don't get cell phone reception everywhere. I until very recently used to have to jump into my car and drive 20 miles over a bridge to get cell phone reception, just to verify a Google account or something like that.
Wow.
So these smartphones that are voice over blockchain are going to really sweep the world and make a huge difference to people who have never been connected before.
Absolutely.
to the modern world. And that's just one of
it's a practical example, isn't it, of the technology. But let's maybe help people understand what you've just said there, Robin, because we spent a little bit of time talking about the importance of owning physical gold. Okay, just make a note of that, guys. This isn't about owning futures contracts or certificates in gold, because frankly you don't own it. That goes into a financial system that is owned by somebody else in lieu of a position. We're talking about physical gold here, so don't forget that. And we're also talking about 99.99 bank grade gold bullion. Okay, coins are also important, and you'll realize that as you go through your journey. But we're talking about here owning the physical gold. Okay, but did you hear what Robin said there about the blockchain? I mean, that's something that is very, very new in many ways. The blockchain has been around for many years, and most people understand the manifestation of that to be something called Bitcoin. And everybody who's been listening to the mass media or researching online over the past 2 years will have seen what's happened to that particular incarnation of the blockchain. And Bitcoin went through a very high peak and has come down in a very quick manner because of the speculative nature of people, human beings. It's what people do. They see something go, they chase it rather than properly understanding the full financial history and education behind it, which is relevant to gold, actually, if you start to do your research. Now is a very good time to get into gold because it's never been as low in real terms, and compared to what it needs to be if it was backed or the backing to fiat currency. But that's another story. But the blockchain is something that we've been involved with for many years, actually, through different altcoins and Bitcoin and Ethereum and Litecoin, etc. But to Robin's point, each and every one of them there's about over 2,500, 2,800 different altcoins and main coins you can get hold of on CoinMarketCap. But the vast majority of them are based on confidence and perceived value. What Robin's talking about there is the ability, if you think about it carefully, to be able to take the technology, which is blockchain, and tokenize that. In other words, create a blockchain-based ledger contract that holds you to a position of ownership of physical gold. Now, that is the difference. And if that is a foreign language to you right now, again, you need to speak to Robin and just understand this, because the bigger picture we're talking about here is actually something called the Internet of Money, or Internet 3.0. So back in the mid-90s, we had the first internet. We had www. We had email. We had all these basic websites we were able to go and communicate with each other on. Back in the mid-2000s, we had Internet 2, which is the incarnation of the internet on mobile. So we can be accessing the internet wherever we are these days. That's Internet 2.0. Internet 3.0 is just coming to shape now, and it's being formulated on the blockchain. So I always like to say, Robin, to people that imagine getting a hold of information as we're sharing now, when Apple were just bringing to life the first iPhones. Now, if you'd have done your research and properly understood what that meant in terms of Internet 2.0, then you may have made a decision to get involved with that while Apple was still at pennies on the dollar for the stock. Now it's many, it's much, much greater than that in terms of share. That's basically what we're talking about with blockchain technology. And the mechanism we're using is to access that. So take a position on the blockchain through what are called coins, but doubly protect ourselves because those coins incarnate themselves as tokens against a physical weight of gold. In fact, to be absolutely clear, for every 100 of those coins we own, we know the grammage value of them in physical gold. It's 1 gram to 100 coins. Now, what's the situation when you own 100,000 coins or 500,000 coins or 1 million coins? Divide that by 100, you know how many grams of gold you have. Now, is that something that puts you ahead, so puts you in a place whereby you can put yourself forward in terms of asset ownership? We think so. Now, is it all a done deal? Is everything going to be smooth and nice? Is it risk-free? No, of course it's not. But I'd rather be in this position, Robin, of understanding the financial history of why gold, owning physical gold, and also accelerating my way to physical gold. I'd rather be in that position than being 100% reliant on a boss or 100% reliant on a pension fund that I don't have any confidence will be there 20 years from now. So the blockchain, look at it as an accelerator that allows you to get into possession of physical gold at the same time as owning a position ahead of the Internet of Money. That's basically what Robin wants to explain to you, on the basis that you understand what we're talking about today.
Yeah, I mean, at the moment, it's kind of outside the system, but very, very quickly, it's going to be the new system. It's inevitable. It's going to take over. It's going to make transactions faster, seamlessly, fast, cheaper, more secure, more reliable, more private. There's just really nothing not to love about it. I've been around the block in traditional business. I've worked for big companies like BP Oil in London. I've worked for Wells Fargo Bank in San Francisco. I've been in financial management of tiny little companies as well. Tiny companies that would be dependent on huge big companies to pay them. Maybe their major customer was a huge company and they were very slow at paying them like big companies can be. Mm-hmm. I can remember having to drive halfway across country to camp outside the offices of a company and stand there and strong arm them out of a check every month. That was before I was a black belt in karate. But I would make myself so annoying that they would hand over a check. Then I'd have to beg them for use of their telephone, phone my bank manager, phone the company's bank manager, quote the check number to them and the value, and then jump into a car, drive like a bat out of hell to the company bank, deposit that check before we'd be allowed to keep trading. And nowadays obviously you can do things like that by bank transfer, but every transaction now can be seamless, instant, peer-to-peer, which means there's no middleman. There's nobody taking a chunk of it every time you make a transaction. There'll be a tiny transactional fee through the blockchain compared to what we pay traditional banks. And if you're involved in this business, you actually can have a share of that fee as a residual income. So that's another attractive feature of the whole ecosystem that Sean and I are involved with.
Yeah, it's interesting, isn't it? And it segues back to the phone, because what people have to understand is two things, in my opinion. It's become very normalized for us to assume a position of expense every time we make a transaction. Now, the tax side of things notwithstanding, obviously we pay VAT, we pay income tax, we pay things to put into the system. That's a separate thing, that carries on. But what has built up around the whole, let's say, Rothschild's banking system, the standard banking system, is hundreds and hundreds of industries whose job it is to take a little piece of that every time you move. I call it taking a piece of energy, because at the end of the day, we all put energy into something to turn that into a wage, for example, because that's the way that the mechanism works. And then we take that wage and we save up, for example, to put a deposit on a house. Now, in that very saving in the banking system, there's people taking parts of that away from us. That's part of the reason it's called a fractional reserve system. That's part of the reason that currency falls in value. And even when you take that money out, you've managed to save enough to buy a house, you've got to take that into then a mechanism to allow you to purchase the asset, the house. Your home is not actually an asset, but that's another story. But buying a physical thing is then involved with lawyers. You've got the banking system itself that moves cash between itself. You've got obviously the surveyors and all the people around it who have to make that legally secure. Now, there's nothing wrong with that in and of itself. But imagine the scenario whereby all that is seamless because it's inside a decentralized ledger. That's basically what the blockchain is. Now, of course, there's touch points, and there's always going to be fees incurred because things have to move through a value chain. That's nice. That's obvious. But what bugs me is that when you look at it on this level, you realize that just how much more effective the blockchain is in terms of its touch points. In other words, it's a lot more efficient, therefore a lot less cost, compared to people who have a vested interest in making sure that their industry survives by sticking to the status quo. So that's one thing to consider. But the other thing that Robin touched on there is very important, and you need to understand this. What we're basically talking about here is having a floor that is gold. And that means you've got an absolute baseline to the value of your asset. On top of that reside what we call coins or tokens that sit in an ecosystem that's aligned to the blockchain. And they're also something you can move into, as we've already described, by getting yourself, say, 100 KCB, because you'll know that's going to be worth a fixed amount in a certain period of time under physical gold. But the very ownership of that coin is the thing that's making the ecosystem work. It's the blood inside the veins. So if you understand you own that position, then you also need to understand that you have an influence on that asset accruing in value by definition of it being used by human beings. And that takes you back to the phone, for example. So that the whole phone works rather than us paying a Vodafone or a Verizon or whoever to have the privilege of using a network. What you're actually able to do with blockchain, voice over blockchain, is utilize the tokens inside the blockchain as part of the funding of you using the phone. But if you own the KCBs that are fundamentally there making that work, then you'll find that those assets accrue because people are using them. So you get a double benefit in terms of how this ecosystem works. It's very similar with a mechanism called Carrot Pay, whereby it's very much the same as PayPal or Google Pay or Apple Pay. And you work as a retailer in the commercial sector, for example, you're able to use the payment system just as you would an app or a point of sale card reader in your store. And you're able to offer people the ability to pay in cash, fiat, in gold, believe it or not, or on crypto. And as a retailer, you choose, and the person who's buying it chooses. And over time, because the blockchain is moving, the Internet of Money is moving towards this more efficient space, then retailers will adopt that type of technology over Visa or MasterCard because it's fundamentally cheaper. Now, at that point, the retailer has an opportunity to be able to decide whether they take the payment, let's say, in coin on the blockchain. But by definition of taking the coin, they own an asset immediately on the transaction. They can liquidate an element of that back out through what's called a character exchange to pay suppliers and staff in cash if they choose, but the rest stays as an asset. So imagine generating an asset every single time you sell a cup of coffee in your coffee bar. That's what we're talking about here. And it means that you're able to ratchet the ecosystem and take possession of the coins on the blockchain that are fundamentally backed by physical gold. Now that's quite a complex example, Robin, but it just shows the power of people understanding why they need to own both sides of the chain so that they can ratchet their way to a place of income and asset wealth in one fell swoop, which is why we're so passionate about this project, because we understand the power of owning assets, building a balance sheet, and we also understand the power of building a profit and loss account and creating income into our business, our home business, our bricks and mortar business, or just as normal individuals. We have lots and lots of individuals who are part of this, who simply take an income because they understand the ability to interchange between assets and cash. So it's a special thing, Robin.
You can be paid, in gold. Even if you don't totally understand this whole ecosystem at this moment, because it's a lot to take in. We get paid in gold. This is a Carrot Bar's MasterCard. I can walk into a petrol station or a store, supermarket. I can spend that money just like any other money. It's not difficult to grasp that concept. Anybody can do it. The other big myth about all of this is that hopefully we've assuaged some of your doubts about the technology, but the other one is that you have to be wealthy to be involved. I think that's what I used to think, maybe back in the 90s. I'm not wealthy enough to be into gold. I don't have a broker. I'm not into the stock market. I can't do this. But this system that Sean's outlined there, it's a complete system. You from start to finish, it's all in one ecosystem that you can save assets in gold from as little as $4. I mean, I think I've got a piece of paper here which is actually gold. This is what we call cash gold. That's 0.1 of a gram. It's tiny. Obviously, it's not a lot of gold, but there's a piece of gold in the middle of that is 24 karat, certified gold. If I was to break that out and take it to an assayer, he would be able to prove that real gold. So I could use that in an emergency if I had to. But that's not even £5. $5. It's less than that. You can save that, on a regular basis and build from there if you want. And find out how the system works. You don't need to be wealthy to start with,
no.
But you can build wealth. Very, very dramatically also.
Yeah, we call it paying yourself first, don't we?
Yeah.
The old Richest Man in Babylon, which is a book that you should read if you've not heard of that. And that the whole premise of it, which is for whatever reason is a forgotten art in modern life. I remember my grandparents being very clear to me. In fact, we would, back in the day, you were able to go and take bottles back to the stores, which there's a lot of credibility in doing that as well from a recycling point of view. And every time we did, we get a few pennies back. I remember my grandparents saying, right, you don't spend that stays with me. And I'm going to put that in that pig over there, that piggy bank. Next time you come, we're going to do the same again. And after a few years, we had a few pounds in there. And that was their way of teaching us to pay yourself forward. Now, for whatever reason, even though as it happened, my parents were exactly the same, and I hope I'm the same with my kids because I was taught this. But for whatever reason, credit became much more freely available through the 70s and 80s. And there's good reason for that in terms of the monetary history that you should go and study. And Robin can throw a few links in here To people like Mike Moloney and Lynette Zanger will explain very clearly what the monetary history has been over the past 100 years, 105 years to be precise. And you'll be able to see why maybe it's been the case that it's suited certain mechanisms to bring in access to credit. And it was certainly something that was done in the 80s through the Reagan and Thatcher years, that encouraged people to fundamentally use money to put themselves in a perceived better place. Now, that had a lot of merits, of course. You know, a lot of us do live more comfortable lives than many of our grandparents did in real terms. The question is, at what cost? Now, and having that ability to get hold of mortgages and perceivably own your own home is one thing. And that should be something that we can see as a positive. But the problem is, while all that's been going on, there seems to have been a big neglect of the fact that we need to pay ourselves forward, because it's in the monetary system's interest to leverage debt. That's the whole point. You know, and it exemplifies itself because only as recently as the 1990s came out financial products called derivatives. These are a complete invention of the past few years, whereby debt is leveraged against debt, is leveraged against debt, which is exactly what brought down the Lehman Brothers and the property market back in the 2008 period. The problem we've got is that they didn't fix any of that. And they've certainly not taught people to pay themselves forward. They've encouraged people to get into even more debt and chase the very low cost money that's been driven by low interest rates in the past 10 years, and something called quantitative easing, which has basically punched more money into the system. And all that's happened with that money and that currency is it's gone into things like the stock market. And the banks have gone into those stock markets, the pension funds have gone into those stock markets, the insurance companies have gone into those stock markets, the governments have gone into those stock markets, which has meant that the whole thing has built into a bubble. And it's that bubble that your future may well be dependent on if you're 100% reliant on something else as a pay yourself forward. If that, the big if is there, because most people, according to reports, aren't putting themselves in a position of even having a pension. So they're not paying themselves forward at all, because there's always more month than money. They're trying to live the life, they're trying to keep up with the Joneses, they're trying to keep everything moving, but they're only living from paycheck to paycheck. And that figure is increasing. So there's good reasons, Robin, isn't there, why people should just stop for 1 second and listen and take a little bit of advice and education and start to leverage what gold represents and how it can be accelerated through blockchain.
Yeah, I mean, and the frightening thing is, I mean, we're not saying it's doom and gloom. We're not saying the sky is going to crash on us tomorrow. But the frightening thing about all this, you know, casino economics that's been going on is that, you know, governments are in debt too. So you can't rely on them to save you. You know, just think about your own household economics. If you were running out of money halfway through the month, you didn't have enough money to buy your food, and you could just print more money. You know, you had a little printing press on your kitchen table and you could just bang out more and more money anytime you needed it. You know, how crazy would that be, and how unrealistic really would that be? But that is what's been happening, you know, across the Western world. I mean, America is, you know, 20 odd trillion dollars in debt, you know, and there's countries in Europe that are struggling too. You know, that cannot continue forever. And so there will be some kind of reset. When that happens, don't rely on, you know, Uncle Sam or the government to look after you, because they'll be looking after themselves.
Yeah, they've no choice to. And that breaks your heart, because the public sectors of these westernized economies have never been as big. And there's reason for that, that the governments, it could be argued, have an interest in becoming bigger in terms of how they influence society, and that you know, people have differences of opinions on that. But while the public sector is growing, then more and more people are dependent on being paid by taxpayers in the private sector. That's just the way it works. More and more of that then is put into, supposedly into, pension plans within these bubble areas of the stock market driven by things like quantitative easing and manipulation of interest rates. But the thing that really gets me is that the baby boomers coming through now, who started their working careers back in the 70s, are now coming to the point where they need to draw on those supports. Very quickly behind them is my generation, the Generation Xers, who are now having to put more in to fund that. It's just to stand still. And we're very shortly going to be putting burden on that as well.
Yep.
And the whole thing is based on derivative hedge funds. So this is what we call creating your own economy. Okay, yeah. This comes back to the fundamentals of why you need to, first of all, have assets that you control yourself and you're not reliant on the banking systems as described, or the governments that are embroiled inside it because they've no choice. If you think about governments, they work with 4-year cycles. Their raison d'etre, their number one objective is to get power for that next 4 years. They're going to tell people, we call it bread and circus. They're going to tell people what they need to tell people in order to get the vote. It's very easy, and that's why a lot of what happened back from the 70s and 80s has continued, because the printing of money through central banks to allow governments to set up infrastructure projects, etc., yes, on the face of it, has been beneficial with heated streets, secure streets, and everything else. But ultimately, it's all been based on money that's been borrowed from the future. We're saying that this is coming to the end of that particular epoch. And it's obvious that it is, because of the way 2008 had to be corrected and the monetary supplies had to be increased. If you track a line from 1900 all the way through to 2008, you'll see the monetary supply in the United States, for example, went from about $1 million in terms of what's total money in the system, all the way through to about 1.8 trillion in 2008. From 2008, it's gone from 1.8 trillion to 4 trillion in less than 10 years.
Yeah, it's crazy.
It's absolutely crazy. And that's happening because of the way that we're describing these fiscal policies have had to play out, not just to get the status quo remaining in play and keep people living life the way we think is normal, but also to keep the system in a place of perceived stability. That is ending, Robin, frankly.
Sean, we could talk about this all day. I know you and I could talk about this all day. Unfortunately, this is only a 40-minute Zoom call, so we'll probably need to wrap it up pretty close to now. Just really, thank you very much, Sean, for coming in. I hope people got some value from this. Check out Sean, DB Business Masters 50K Club, and come and visit us at Gold for You and 22ndcenturygold.com. You know, Karatbars is a very simple business. It sounds complicated. It's a very simple business to get into, and then you can learn as you go. There's a whole suite of things that are coming into play over the next few months and years, which if you're an early adopter, like you will still be, like we are, you can earn significant incomes. Bonus coins, so you're getting things for free just for being there and doing the thing. I urge you to have a look at it and don't rely on the government to look after you. Sean, have you got anything to finish off with?
No, I appreciate you reining me in there, Robin. I know we could talk all day, but this is about just providing some insight, giving people something to think about. The sky is not falling in. We're not Chicken Little fans. This is about simply giving you the information so that you can speak to the relevant people, including Robin, absolutely Robin, to make sure that you take some next steps. And as I say, we don't really care what you do. We're not here to advise you on anything, but we do very much care that you listen to the information so you can be in a stronger place, not just for you, but for your future family, etc. So I appreciate your time, Robin. It's been really good.
You're welcome.
And we'll catch you on the next one.
Thank you. Bye-bye now, folks.
Thanks, guys.
Bye.